Welcome back to NYSE TV Live. I'm Kristen Scholler here in the studio. Well, have you heard of October Theory? It's a trend taking social media by storm. The theory goes that the fall is actually the best time to set goals, maybe contrary to typical goal-setting time at the new year. Well, we believe that putting your personal finances front and center is a good idea. And because of that, I want to bring in personal finance expert and wealth advisor, Larry Sprung of Mitlin Financial. Larry, it's great to see you this morning. It's been a while since we've been able to catch up, but I want to hear from you more about the purpose of October Theory that's currently playing out on social media.
Yeah, thank you, Kristen, for having me. I'm excited to be here with you once again. And October Theory is certainly taking the internet by storm. And I think it's a great idea because many times we start planning in January, and by the time we get started working on these goals, we're already well into the year. So starting to plan that out in October is amazing, because then you could start off January 1 on the right foot and get things moving quickly.
Okay, I like October Theory officially. That's my takeaway. Larry, with your take there, what steps should viewers take at this particular point in the year to set themselves up for success?
The best thing is to take a look. Number one, be grateful for what you have and where you are, and take a look at where you and what you accomplished this year thus far, and take stock in that. And then start looking out to what your goals and objectives are for the new year, and start mapping that out month by month, what you want to achieve, and then set up tracking mechanisms to make sure that you're staying on track with those goals.
Yeah, I think I heard a phrase once, what is measured is what matters and what can actually change. So I like that input. For some of our viewers, healthcare, open enrollment, time is here or it is on the near horizon. What are the best ways to approach that and consider your options?
I think what you should not do is just take for stock that what you had in place for this year is what you should automatically roll into next year, because that's a passive approach that a lot of people take. And you really want to see, were the benefits that you enrolled in and paid for this year really beneficial for you and your family? If they were, then you can take that approach. If not, then you have to do a little research and take a look at what benefits or what packages might be better for you and your family, and make those adjustments for your benefits. Same thing with your retirement accounts as well. If you undersaved this year and you're off your goals, make sure that you increase those savings goals as well.
And probably a good reminder for our viewers as well, Larry, correct me if I'm wrong, but each year the amount that you can contribute to your retirement usually goes up, right?
Absolutely, and that's something that a lot of people fail to take stock in and evaluate, because we've seen families that come to us and still think that their maximum for a 401k is in the $14,000 or $15,000 range, because that's what it was many years ago, and it's $23,000 this year. And we'll be hearing an announcement soon about what that's going to be going up to for 2025.
Look, the holidays are right around the corner. How do you recommend people approach holiday shopping this year?
I think what you have to do is take a look and budget for it, right? Just don't go into it with an open-ended checkbook in terms of, you're going to go in and buy what you want to buy for the family. Set a budget and stick to it and plan it out, how much you intend or want to spend on family, friends, and business associates, and try to stick to it as best you can, because once you get in the store and you get wrapped up in that environment, it's very easy to overspend.
So to that end, Larry, certainly a lot of people are shopping online these days as well. If you see a deal, you might be so inclined to take advantage of it. Maybe FOMO is at play. You don't want to miss out, have that fear of missing out. What's the best way to approach deals that might come into your feed or your inbox?
Well, not every deal is created equal. Just because Amazon or whoever the retailer is says it's a deal doesn't mean it's a deal. Check it out. Take a look. Google it. Take a look at where and what it sells for with other providers, and maybe you can find a better pricing. Just because it's labeled a deal does not mean that that is so. And do your research. You can save tens, if not hundreds of dollars that way.
We were talking about investing earlier, and of course, investing is part of savings. But I'm curious for our viewers, how would you recommend that they look at perhaps a high yield savings account in this environment, Larry, versus making investments in the stock market?
I think you have to evaluate what this money that you would potentially be putting away in a high yield savings account or an investment is going to be used for, or what its expected intentions are, right? The longer the term you have in terms of not needing access to that money, then that makes the case to invest. If it's something that you're going to need in the short term for a home project, a wedding, school, something of that nature, then I would highly suggest that high yield savings account over an investment. You know, if you're going to have it in there for the next 5 or 10 years, then I think that makes the case to invest those funds rather than a high yield savings.
On this show, we talk a lot about the Federal Reserve, about interest rates or borrowing costs, and I'd like to hear from you, Larry, why viewers, Americans, should be following that, how those borrowing costs and the actual rates can impact their finances.
Yeah, I mean, what the Fed is going to do, and what they have done, you know, lowering rates last month, and then there's an expectation that we see rates continue to move down, it is vital to most of the things we do. If you're looking to buy a house, it could impact that mortgage rate. If you have credit card debt, it will impact that interest. And, you know, anything that you're looking to do that incurs borrowing is affected by the Fed and those interest rates that the banks are going to be putting out. So pay attention, and maybe you can hold off on a certain purchase that you might need to incur some debt on and wait for those lower rates. If not, just be mindful that you may want to refinance at some point that debt.
Larry Sprung, founder and wealth advisor at Mitlin Financial. Larry, it's great to see you. Thank you for joining.
Thank you.